Last week, the Fed's policy decisions determined market sentiment on Wall Street. And this week, the crucial event will be Jerome Powell's testimony. A rapid rally of high-tech stocks is losing its steam, but investors retain strong optimism. Investors are taking the prospects of two more rate hikes until the year end with a pinch of salt. So the Fed's policymakers are trying to calm down market buzz. Two Fed officials copped well on Friday. And this week, investors are anticipating Powell's Congressional testimony. The main catalyst for a rally on Wall Street was robust growth of high-tech stocks. They pulled back on a Friday and thus erasing a part of weekly gains of the benchmark stock indexes. The Dow Jones slipped by 0.31% to 34,301 points on a Friday. The Nasdaq lost 0.68% intraday. The S&P 500 dropped by 0.36% to close at 4,409 points. On a Monday, US stock exchanges are closed, so the stock indexes are trading almost flat, with the same sentiment as at the closing bell on a Friday. The S&P 500 is expected to trade in the intraday corridor between 4,380 and 4,440 points. The S&P 500 and the Nasdaq retreated from the highest levels in the last 14 months. Still, both indexes closed last week in the red due to the losses in the high-tech stocks and the hawkish comments from some Fed officials. Last week, the Federal Reserve maintained the status quo at the policy meeting on a Wednesday. Nevertheless, the regulator signaled that borrowing costs could be increased by another half of a percentage point by the year end. Despite this forecast, investors believe that the Fed could suspend the cycle of rate hikes or even lower interest rates in December after the highly anticipated rate hike by 25 basis points in July. Fed's policymakers tried to sow excessive optimism on a Friday. Fed Governor Christopher Waller said that headline inflation would hardly ease, as I'm looking forward to. Richmond Fed President Thomas Parkin advocated for another rate hike, bearing in mind that inflation has not eased to the target level of 2%. At the same time, policymakers continue to refer to the independence on economic data. The latest report showed that U.S. consumer short-term inflation expectations fell to more than a two-year low in June, while the outlook for the next 5 years improved slightly. According to the University of Michigan survey, which also showed an improvement in consumer confidence. On a Friday, the S&P 500 and the Nasdaq were affected by the pullback of the high-tech giants. In particular, Microsoft stock, after closing at its highest ever on Thursday, dropped by 1.7% on Friday, while Amazon was down 1.3%. Nvidia shares edged up by 0.1% after Morgan Stanley raised its price target and named the chipmaker the best choice among U.S. semiconductor companies. Adobe shares rose by 0.9% after Photoshop maker's profit forecast beat analysts' estimates. iRobot shares surged by 21% after Britain's competition regulator approved Amazon's planned $1.7 billion acquisition of the vacuum cleaner maker. Micron Technology shares fell by 1.7% after warning of a bigger hit to the global revenue due to the China's ban on selling its memory chips to the country's key industries. Of the 11 S&P 500 industry indexes, 8 declined. led by the telecom services, followed by losses in inflation technology, and the sectors shed 1% and 0.83% respectively. At the same time, the weekly results of the major stock indexes turned out to be quite impressive. For the week, the S&P 500 rose by 2.6%, and the Dow added 1.2%, and the Nasdaq 3.2%. The Nasdaq posted its 8th straight week of gains, marking the longest weekly winning streak since March 2019, and the S&P 500 closed with the gains for 5 weeks in a row. US exchange volume was strong at 17 billion shares compared to an average of 11 billion shares over the previous 20 sessions. On a Monday, futures for the stock indexes are trading sideways as the stock exchanges in the United States are closed today. The indexes kept Friday's cautious sentiment, and their strategists continue to wonder what would happen to the market rally. Hopes that the Fed will end its most aggressive tightening campaign are driving stock indexes up, dominated by the US tech giants, which tend to perform better than when risk appetite is supported by a looser monetary policy. Billions of dollars have put into big tech stocks in recent weeks. Analysts foresee the potential for artificial intelligence to boost productivity. A 15% rise in the S&P 500 during the year brings cautious investors back into the market. Option investors are buying call contracts, betting on a stock rising at levels not seen in recent years. On a Thursday, a record 1.8 million S&P 500 call options were traded. Some Wall Street banks are revising the forecast for how high stocks could rise. Analysts at the Goldman Sachs upgraded the S&P 500 year-end target to 4,500 from 4,000, citing expectations that the economy is likely to avoid recession in the next 12 months. History also shows that stocks tend to continue to rally after rising by 20% above their lows. The S&P 500 posted an average gain of 18% in 12 months after breaking the 20% threshold. However, some fear that the stock market is already overheated. Sentiment has skyrocketed too quickly given that inflation is still quite high and the Fed remains hawkish. In any case, the new week may help to see the future of monetary policy more precisely. A little more clarity can come from Jerome Powell, who is scheduled to give a keynote speech to Congress on a Wednesday and Thursday. At the same time, Jerome Powell, like his colleagues, is likely to try to assure the market of a further increased rates and to keep them at the highest level until the year end. In addition, PMIs from around the world will be released this week, offering a fresh look at the demand trends and evidence of the health in the manufacturing sector in the United States, Europe, and Japan in June. The currency market is also trading sluggishly on a Monday, and the major currency pairs are coming back to life following a highly volatile week. The US dollar index could regain its footing across the board. The index recovered by 0.16% intraday to trade at 102.4 points. The intraday carry for the instrument is seen between 102.20 and 102.70. The greenback advanced on a Monday as investors have absorbed some policy decisions of major central banks made last week. The Bank of England is due to announce its policy update on Thursday. The British Central Bank is widely expected to raise the key interest rate at least by 25 basis points at the meeting on Thursday. It's still fighting against soaring inflation, which is 4 times as high as the target rate. The chance of a rate hike by 50 basis points measures 25%. In any case, almost every major central bank now looks more hawkish than the Fed, and last week the market was riveted to the policy meetings of the Federal Reserve, the ECB and the Bank of Japan. In this context, the US dollar index marked by the biggest weekly drop since January. Now, traders will be closely watching the Congressional testimony of a Fed Chairman Jerome Powell, and his reports are scheduled for Wednesday and Thursday and will be closely scrutinized for any hints of further policy moves. The PMIs will be one of the important risk events for the dollar this week. The Fed has already slowed the pace of tightening by skipping the rate hike, but that doesn't mean the cycle is over. Markets are now pricing in a 72% chance of a 25 basis point rate hike next month. Curiously, investors refuse to believe that the Fed will go any further after the July meeting. The Canadian dollar has settled at the most comfortable levels in the last 9 months. The USD card pair slipped again to trade at 1.3195, 0.5% down from Friday's levels. The instrument is likely to trade in the intraday corridor between 1.3180 and 1.3210. Despite a minor recovery in the US dollar and the deepening oil prices, the loonie is standing tall. The Canadian dollar owes its strength to expectations of another rate hike by the Bank of Canada and to forecast for oil prices. On a Monday, Brent crude fell by 0.13% to $76.50 a barrel, while WTI lost 0.24% to trade at $71.50. Both contracts ended last week with a profit of more than 2%. The oil market is baffled by mixed data from China. A number of major banks have cut the forecast for China's 2023 gross domestic product growth after May data last week showed that the second largest economy's recovery from the pandemic has slowed. People's Bank of China is expected to cut its benchmark lending rates on Tuesday after a similar cut in a medium-term policy loans last week to bolster shaky economic recovery. However, China's refinery output surged in May to the second highest on a record, helping boost profits last week. And the rise in Iranian oil exports also affected prices. Iran's crude oil exports and oil production hit record highs in 2023, despite US sanctions. The crypto market opened a new week with a mixed sentiment. Cryptocurrencies are following different trajectories. Bitcoin is hovering at around $26,500. Popular altcoins are trading mixed. Ethereum, Binance and Litecoin lost 0.6 and 1.78%. Solana, Ripple and Cardano rose by 0.05 and 1.4%. The information background of the crypto market is dominated by Binance-related news related. The exchange platform has entered into an agreement with the US Securities and Exchange Commission to ensure that the assets of the US clients remain in the United States. Under the agreement, Binance.US will take steps to ensure that no officials of Binance Holdings have access to private keys for its various wallets, hardware wallets, root access to Binance.US tools. The Commission's statement released on a Saturday said that the emergency relief order issued to Binance US customers will protect the assets and ensure they further withdrawable. Speaking of the intraday forecast for Bitcoin, the token can trade within the corridor of 26,100 to 26,750. Going beyond the range can lead the price either to decline to 25,800 or to increase to 27,000. Make profits with the InstaForex, monitor events in the financial markets on the InstaForex TV channel, and see you online tomorrow.